Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right, fantastic. Good to see everyone. Happy Thursday. I've got the Fed Watch screen up because I'm going to refresh this with everyone right now. All right, so take a peek. Pretty swift sell-off on the PPI this morning that was released at 8:30 a.m. Eastern, so just under an hour ago. And you'll notice that we moved down. There's going to be a headline out there that you will no doubt see that traders are less. Let me get my drawing tools up. Okay, there we go. That traders are less inclined to expect a rate cut. That's pretty laughable. Yes, we were at 99%. I think 99.9% yesterday. And it dropped down to 94.5. Anything over 80 would be considered fully discounted. And anything under 80 would still have a question mark as to whether or not they're actually going to cut rates or not. This is still very much a quarter point cut that is expected on September 17. So yes, indices did sell off a little bit, but this is not in any way changing the expectation of the rate cuts. Now let's go take a look at what's going on with the indices here this morning. So we'll take a look at the 5-minute chart. All right, and see what we've got. All right, so first off, remember this is still OPEX week. And this is probably one of the more volatile OPEX weeks that I've seen, probably all year. Who here can remember a wackier week than this one going into the third Friday of the month? I can't recall. I was looking at my notes, and this has been a pretty wacky one. Now, it could be for a number of reasons. We still have a lot of geopolitics. We still have a lot of when and who is going to replace Powell. We still have a lot of uncertainty about whether or not Powell is willing to cut rates. I mean, there's a lot of uncertainty and doubt about whether or not he will do it, even though the Fed fund futures are reflecting it. So the trust in Powell is just simply lower. Well, we don't, and it doesn't matter that it's Powell or Yellen or back in the day, Greenspan, Bernanke, who can forget the Bernanke? It doesn't matter who it is. If traders and investors are not feeling, right? I hate feeling and hoping when it comes to trading, but if they're not feeling that the monetary policy, Powell, and expectations in the markets for rate cuts are in sync, this is what we get. And ultimately, what this is going to do, you can see clearly it's sent price below the previous session close right in here. And as long as we're below 64.84, we're in the bearish side of sentiment. So that's a line in the sand, right? This is a sentiment line in the sand. And we're going to start the day below it. We were hovering above it. Look how it was acting as beautiful support, right? And then here comes the data. And that's what data can do. And that's why we call them hot zones. Same thing with the NAS, same thing with the Russell, same thing with the Dow. Now, what about bonds? Let's take a look. What's going on with bond yield? They dropped as well. So keep this in mind. When this is the ZB, but the same thing would apply to TLT. When we have a sell-off in bonds, that's actually the yields moving higher. And that's the opposite of what we would expect if there's a rate cut roughly 1 month away. So again, you can see the uncertainty everywhere. Gold isn't moving too much. Bitcoin has problems of its own this morning. If you take a look at BTC, this thing has problems of its own. There was a lot of chatter this morning about Bitcoin, and I'm going to go grab some of the quotes that I saw here. Let's see. And it had to do with Bitcoin reserves. So Bitcoin reserves are worth around 15 to 20 billion. This is what the Treasury Secretary said. He also said on the crypto reserve, we are not going to be buying it. We will use confiscated assets. That came out at around 8:15 this morning. Actually, 8:17 is when I'm seeing the news. We are going to, we're going to retain gold as a store of value. I doubt we're going to revalue U.S. gold holdings. And, all of that in combination, you can see within about a 15-minute window, sent Bitcoin down as well, right? So this is still very much a headline-driven market at the moment that has yet to really find some footing, despite some of the uh, all-time new highs and things like that, up at 122. That visit to 122 was a very short-lived one. Everyone can see that on the chart. All right, let's bring in the daily time frame as well as we're going through the morning. So again, PPI rocked the indices. Separate news around Bitcoin reserves rocked Bitcoin. Gold didn't move because it really didn't change anything, right? As I said, there was no change in gold holdings, so there's no reason for gold to move, but plenty of reason, obviously, for Bitcoin to move. And again, this is why reason number 792, we don't buy new highs, right? It's a very vulnerable place to be. So we know that rate cut expectations are down, 5%, still well above 80. No reason to worry about that. All right, now a couple things I wanted to mention. Number one, if you're a new member to the Mastery, you've got a number of free tools in the files drive. And whether that's the PDF that allows you to open up a shared link so you can set up Thinkorswim pretty much in a click. And every Monday, the bot does a tech session. And I'll tell you, any one of those sessions is gold, right? Check out any one of them, because chances are almost every week, the question that you have was a question that your fellow members had as well. And I did want to just really quickly here do two things. One, quick recap of yesterday and what open trades we have now. So number one, I'm going to go over those indicators in just a moment. Number two is OpX, this conversation that we've been having this week, specific to this week only, the third Friday week of every month. So we're going to deal with this 12 times a year. The entry zones that I've been talking about are not about getting in before OpX. Those entry zones are for that Friday options expiration. So tomorrow is going to be a very likely busy day of setups, and then seeing if we can get those zones to be reached tomorrow, Friday. On OpX week, if you are going to swing trade, if I am going to swing trade, I'll likely prefer to have any trigger be met by Tuesday. That way, really, I can manage Wednesday, Thursday, and then look for another opening for new entries on Friday. This is what we've got right now, and I'm pretty keen with this. We started the week off with 4 open swings. BKR, I closed. That's our one loser this week on the swings. Schwab is still open. Google, I had to close. We had some crazy action yesterday. I watched that wick. It was so quick, and then I just took a breath and realized, okay, I'm below that support level. This thing expires tomorrow. Huge winner for us. But that now is closed. So I've got one open swing, which I love, because BKR and RTX put some capital in our account, increased our buying power. Cutting those now frees up more capital, quite literally, and mental capital, right? So we've got one position going into tomorrow, potentially, if Schwab continues to hold above $4.60 for those September 19, 92.5 calls. Another thing that I wanted to mention, and if you haven't already as a new member, and I sent this out as an alert, you can see, I sent alert, you can watch you can see the link that's in that alert, and you can see the link I gave you that has just 4 short videos to walk you through position sizing, how to navigate the room, and all the free tools that we make available to Sector Secrets Mastery members, including the tops layouts. Now, if you're watching my charts, I am using top tier, right? I use tops for the better part of about 20 years. And we want to make sure everyone who starts off in the room has a foundational setup that is going to do the things that I want to be able to track. So make sure if you're looking for a particular indicator that you've got the right toolkit. If you're using the tops, those are the tools that come with tops, right? Everyone in the Sector Secrets Mastery also gets the hourly price movement range, the HPMRs for the Dow, the Russell, the S&P, and the NAS, right? So we do make those 4 symbols available to Mastery members. So if you're looking for any specific tool, make sure you're using the right toolkit, if you will, tops versus top tier. Top tier is an upgrade and no one needs to start off with that, right? Lots of free tools in here. The previous session close tool is in there. The sanity check tool is free to all of our members. So if you're looking for something and it's on my screen, make sure you're, clear on whether you're in the tops or the top tier. But yeah, tons of tools for our members on day one. Yeah. So I wanted to definitely address that. So I don't want there to be any confusion. So check out those free videos and you'll be well on your way to setting up your indicators and your layouts to either the tops or the top tier. And remember, every Monday, Lauren Abad is here to walk you through it. Okay, so what do we got? The bell is rung. I mentioned that we're in sort of the bearish sentiment side of the morning, thanks to the PPI for the most part when it comes to indices. We've got OpEx tomorrow. So today's really going to be tricky because we've got FOMC speak at 10 a.m., which means because of the 10 a.m. hot zone, anytime, it doesn't matter what it is like, because of any kind of scheduled event at 10 a.m. Eastern, there is a time crunch. And what I mean by that is if we are going to get any day trades, which have been tricky this week, I'll be the first to say, there is a time crunch to get the trigger, the fill, right, by 9:50 a.m. Because if I wait too close to 10 a.m., I don't have enough time to see if that trade can follow through or not. So if I can't get a fill on a day where we have a 10 o'clock hot zone, a high impact scheduled event, likely macroeconomic, any Fed member is going to be in that macroeconomic section of our analysis, right? Anyone who's going to have comments on monetary policy, that's macroeconomic. So if I can't get a fill by 9:50, I'll wait till after 10 a.m. But that's not the only hot zone we've got. This afternoon, we've got the president speaking, and then we have another FOMC speaker as well at 1 and 2 p.m. And that's fine because I'm not looking at a lot of active swing trading until tomorrow. We've been managing 4 open trades, closed out 2 winners, closed out 1 loss in BKR, and then now we're managing Schwab into the morning. So I am curious what Schwab is up to with all this weakness. And Schwab's actually holding its own. It's actually holding its own. Was higher, selling off on the morning a little bit. And actually, if you take a look at the indices this morning, that reaction to PPI with the perception that that might alter whether or not Jerome cuts rates in September was way overdone. And you can already see a bit of a bounce happening off the Darvis level that triggered back at 9:05. So remember, when we're looking at the indices, we're not looking at a 9:30 start, are we? We're talking about something that's been trading for hours before the Wall Street bell. But we are going to expect candles of unusual size, larger than normal size candles. And then we'll see what range develops and whether or not traders are willing to get price back up through yesterday's close. But this is hardly a bearish environment. Take a look at this daily for a moment, gang. This is hardly bearish. Does everyone see that? Yeah, we're down, but we actually just made an all-time high, and then we're down from that. And that's the perspective that the daily is so effective at giving us, right? That perspective of where are we in the big picture? Yes, this looks like a lot of drama on the 5-minute chart, but take a look at the daily time frame. This move on the 12th, which was Tuesday, the move yesterday, the move today, we're just taking back some of yesterday's gains, right? We're nowhere near where we were on Monday or Tuesday, right? This is still a very bullish market. And bullish because earnings season was not terrible. Bullish because we're still expecting the Federal Reserve to cut rates, and whatever concern there was about tariffs, especially around semiconductors, that does seem to be, for the most part, sorted out. So we have a rhythm to the morning, right? We talked about that yesterday, about the first 20 minutes of our session here in the room that starts at 9:20 to about 9:40. We get an assessment of what's going on. We let at least the first 5 to 10 minutes go by, right? Exactly, Alex. Never jump in at the open. I'm with you there, 100%. No need ever to be jumping in at the open. I agree. I could not agree more. Ultimately, what we want to remember is that timing on day trades, for me, I like to do my day trading the first hour of the day. When I've studied years of my day trading, I not only looked at whether or not the week was positive or negative, but I also looked at the time the bulk of my winners were placed. So this is another thing that I think for those of you that are uploading your trades into a trade tracker like TradesViz, which is what I like to use, TraderSync, TradeMetria, any TraderView is another very popular one. Whatever one it is, if you're using one of them, don't just look at the metrics of win rate. That's frankly the least important. Take a look at your average size loss. Take a look at your average size gain, and take a look at the time that you entered the trade. And you're going to get a lot out of that fourth factor, the time from which you enter the trade. So we're almost through the first 10 minutes of the morning. We're past the first almost 7 minutes. So we're going to move this daily aside. And I want to keep an eye on the hourly and the daily because, if there is a swing that could set up, I want to at least within view. So we can take a look at that when we switch on over to our swing trading part of our morning at 10:30. In terms of strength or weakness right now, again, everything is below the previous session close. The NAS seems to be the snappiest in terms of trying to move higher. And it looks like the Russell and the Dow, are the slowest to regain some traction. Does everyone see that? They're not going lower, but they're certainly not moving as high quickly as the NASDAQ is. So that tells me there's probably a little bit of leadership in sectors within the NAS. So what are the sectors within the NASDAQ? So if I'm looking at NASDAQ specifically as maybe being the strongest, what I'm looking at is technology, semiconductors, communication, and consumer discretionary. Now, if the Dow is lagging, the Dow is mainly, believe it or not, number one weighted sector in the Dow is financials, followed by tech, healthcare. You could probably do a toss-up between energy and industrials and transports. So that's the order of the weighting of the sectors in the Dow. Now, the S&P, as I've said, is never the captain of its own ship because it's kind of a mishmash of both of those. It's mostly technology, financials, healthcare, and then I would say energy. So you can see it's a little bit like the NASDAQ and a little bit like the Dow, which is why, unless there's clarity from the Dow and the NAS, there's usually very little follow through on S&P. So the S&P is the last thing that I'm going to look at. And the Russell is a world completely unto itself. Because when you take a look at the sectors and the stocks weighted in the Russell, they're nothing like, right, what's weighted in the Dow, S&P, and NASDAQ. So it can absolutely do its own thing. Now, if the Dow is kicking off the morning a little heavier, I'll look at maybe whether or not there are some opportunities in financials like JP Morgan, Bank of America, Wells Fargo, Citi. Of course, we have the open swing in Schwab. So am I seeing any proximity or strength that I could take advantage of where I like one stock in that group better than another? Well, I don't want to just compare the financials. What about the Dow Industrials, right? Let's take a look at the XLI, right? Is it moving higher or lower? It's heavy and it's in a downtrend. So keep in mind this idea of alignment. This is going to save everyone from a lot of painful trades and find better ones. So alignment means I've got the index moving in one direction and the sectors really within it, right, are moving in the same direction. And then lastly, and I do mean lastly, is the stock. So if I'm looking at a stock in the industrials, right, and the industrials are bearish, the Dow's neutral. First, I've got to figure out, do I want to be a buyer of puts or a buyer of calls, right? Do I want to be a buyer of puts or a buyer of calls? So if I know that, for example, Jeremy, you mentioned GE. So what do I know? The Dow is kind of sideways, but below the previous session close. The industrials are down, and GE itself is very high volatility. How can I see that? We've got this overlap between the hourly price movement ranges. Price has been above and below those zones. So GE is on a very wild journey in a weak sector. So I don't want to buy it necessarily because I don't have a setup, but I also know the sector it belongs to is rather heavy. RTX, this was a swing winner that we closed out earlier this week. So if the Dow is up and industrials are down, RTX is a bullish outperformer. So if I want to be long anything, if I'm comparing GE to RTX, RTX is going to win. What else is in this group? Honeywell. See, I don't want to trade Honeywell. Now, Honeywell would be great if I want to trade in the direction of the sector. If I'm looking at finding a bullish name that's fighting the weakness, that would be RTX. And I would leave GE alone because of that extreme volatility. Uber is also in this group. So what's Uber up to? Well, Uber's up. So again, now I can start to discern what a bullish watch list versus bearish watch list would look like. And then I'll ask myself, is in alignment? Is that stock in alignment with the sector? And is that a sector in alignment with the index? And that's the way we want to think about the way in which anything is going to move, because follow through is very much either that stock is so strong it doesn't care what's happening in the broader averages and in the sector, or it's in alignment with. And alignment's going to be a whole lot easier to discern. All right, what else do we have? Well, since the NASDAQ is moving higher, it seems to be led mostly by, and I'm looking at my other screen over here, XLK, which is Apple, NVIDIA, Microsoft. And if XLK is moving higher, the stocks within XLK that are moving higher are what I want. So Microsoft, not crazy about, right? No alignment to the stock and the sector. The other sector that's moving up right now is semiconductors. You can see there, moving higher. Number one weighted stock there is NVIDIA. Looks a lot like semis, moving higher. Taiwan Semi is another name in that group. See, that's a little laggy. It's moving higher, but it's a little laggy. So I may not be wild about that one. What about AVGO? Right? So this is how I go through the morning. And you want to take about 10 minutes after the bell to sort this out. So once you've got this sorted out, you can get to work. All right. And that's what we're going to move on to here next. What are those symbols that I want to keep an eye on? But practice this approach. It's going to take you 10 to 20 minutes to kind of do that intel. And then you've got a much better idea of what could follow through.